Hello, my name is Dan Kerp, and I will be discussing the United States-China trade war that has been going on for the past few months. More closely, we will be looking at how this trade war has been affecting the United States stock market. Why did I choose this subject? I chose this topic because of my background. As a finance major and an investor myself, the trade war has had a major impact on many sectors and stability of the stock market. To begin, we must answer the question, what is a trade war first? A trade war is a scenario where two countries disagreeing on economic topics begin tariffing each other's imports and imposing sanctions on each other in an effort to damage each other's economy. For some background on the trade war, you must go all the way back to pre-election of Donald Trump. One of President Trump's campaign promises was to correct the trade between other countries, mainly China. He explained that the Chinese-U.S. trade wasn't fair and that the Chinese were getting a better deal than the U.S. Also, there are many claims that the Chinese companies were stealing information from U.S. companies and disregarding the patents and privacy of the companies. The trade war began on July 6th, when President Trump implemented the first tariffs totaling $50 billion. On August 3rd, China returned fire with tariffs on U.S. goods totaling $60 billion. Over the next 5 months, the two superpowers go back and forth, launching billions of dollars of tariffs on each other. On December 1st, 2018 was when the trade war came to a truce. President Trump and President Xi Jinping met in Argentina for a summit on trade talks. They met an agreement to call a truce and not implement any more tariffs on each other so that trade negotiations could take place. But the tariffs already in place still stood in place. And currently today, the trade negotiations are still going on. Looking at exports and companies who are primarily exporting, China has focused many of their tariffs on U.S. agriculture. Crops such as soybean, wheat, and corn, which are the United States' main agriculture exports, have been tariffed heavily. Other products such as lumber, chemicals, and circuit chips are also being tariffed by China, mainly. Exporting agriculture companies and farmers have been affected most by the trade war. It has caused many farmers to declare bankruptcy, and companies have suffered huge losses. Importing companies have also had a serious impact by the trade war. President Trump put heavy tariffs on imported metals. U.S. companies such as John Deere and Caterpillar have been affected most by these tariffs because much of their steel is imported from China. You can see these effects in their stock prices. The auto industry has also suffered a huge loss because of the revenue they lost on the tariffs on these metals also. These loss in stock prices have been caused by a decrease in revenue and the companies not being able to hedge these effects. The U.S.-China trade war has had huge effects on the stock market as a whole. Mainly it has caused uncertainty. Many investors are becoming spooked because they fear that more tariffs are coming and that the two countries won't be able to come to an agreement. Companies have also not been able to invest as much in themselves because of the loss of revenue. Many companies are also being forced to go bankrupt, especially farmers, because they cannot handle the huge tariffs being implemented on them. Domestic producers have profited from the lack of imports from China, such as American steel. But overall, the trade war has slowed growth in the economy, which has had huge effects on it and the outlook on the U.S. economy. So the question is it worth it? Is it worth for the United States to launch a trade war on another world superpower? In my opinion, yes, to an extent. The trade war has been tough on the economy, but a brighter future is the light at the end of the tunnel. We will have a better trade relationship with China, and there will no longer be any mistreatments in the trade. China has been affected most with a decline in quarterly GDP, which is one of the reasons why President Xi has agreed to trade negotiation talks. The United States economy has maintained a relatively strong economy with an increase in GDP of about 2.2%, and has recovered from the market correction in December. But the United States should remain open to negotiation to not send the economy into a tumble.